Hey everyone, welcome back to Corporate Decoder. Today WMT just filed their 11K for the fiscal year ending January 2026, and I am seeing some massive numbers that tell a big story about where this company stands. Quick note, this is not financial advice, just my take on public filings for educational purposes. This report details the financial health of Walmart's employee retirement plan, and it is a goldmine for understanding the company's scale and how it treats its workforce. Let's start with the auditor's report from Ernst & Young LLP. They've been the plan's auditor since 1998, which shows a long-standing relationship and implies stability in how this plan is managed. They are giving a clean opinion on the financial statements, meaning everything looks pretty straightforward from an accounting perspective. They confirm that the plan's financial statements present fairly the net assets available for benefits. This is good news for participants, indicating that the plan's financial health is accurately reported. Now, let's dive into what really matters, the financials. As of the 31st of January 2026, the Walmart 401 plan had over $59 billion in total assets. That is a staggering amount of money and a huge chunk of change when you think about it, compared to the previous year, the 31st of January 2025. When the plan had just under $51 billion, we're looking at a significant increase of about $8 billion in just 1 year. The vast majority of this, over $57.5 billion, is held in investments at fair value. This is where the real action is. This number jumped from about $49.4 billion in 2025, meaning the investments within the plan grew substantially. This kind of growth is usually a mix of new contributions and positive investment returns. Interestingly, there is also over $1.4 billion in notes receivable from participants. These are basically loans that employees have taken out from their 401k accounts. It is a significant amount, showing that many employees are utilizing this feature of the plan, likely for major purchases or financial needs. Looking at how the plan's assets changed during the year, ended the 31st of January 2026, we see over $13.2 billion in total additions. Almost $1.9 billion of that came from the company itself in the form of matching contributions. This is a substantial amount, reflecting Walmart's commitment to helping its employees save for retirement. And then there is the employee contributions, a huge $2.6 billion. This shows that a lot of Walmart employees are actively participating in saving. Add to that over $168 million in rollovers from other retirement plans, and you get a really strong picture of consistent saving behavior. The investment income was also very strong, contributing over $8.1 billion from net appreciation in the fair value of investments. That means the investments themselves grew significantly in value. On top of that, they earned over $253 million in interest and dividends. This shows a healthy market environment for the plan's holdings during that period. On the other side, deductions totaled nearly $4.9 billion, primarily in benefits paid out to participants. This makes sense as retirements and withdrawals are happening. Scroll fair value measurements as of the 31st of January 2026, total scroll. Let's get into the nitty-gritty of those investments. As of the 31st of January 2026, the total investments valued at fair value were over $57.5 billion. A significant portion of this, over $46.3 billion, is held in collective investment trusts or collective trust funds. These are basically large pools of money managed by professional firms, and they are valued at NAV, which means their fair value is based on the value of the underlying investments. Scrollable 1 Walmart Inc. equity securities. Scroll then, there is over $6.3 billion in Walmart Inc. equity securities, all valued at level 1. This means they are based on unadjusted quoted prices in active markets for identical securities. Essentially, it is the market price of Walmart stock held within the plan. Scrollable 2 government securities. Scroll government securities make up over $1.3 billion in investments, valued at level 2. This means their value is determined using models that consider observable market data, but not necessarily a direct quote for that exact security. Scrollable 1 Common Street Ox Scroll and common stocks outside of Walmart make up another $2.6 billion, also valued at level 1, meaning they are traded on active exchanges and their prices are readily available. Remember those participant loans. The outstanding principal balance for these loans was just under $1.5 billion as of the 31st of January 2026. The interest rates on these loans range from about 4.25% all the way up to 9.50%. This implies that participants are borrowing at rates that are likely higher than what they might earn on their investments, which can be a double-edged sword for their retirement savings. The loan terms vary from 1 to 5 years for general purpose loans and up to 15 years for residential loans. Now, let's look at the schedule of assets. It lists a staggering number of investments. For example, the plan holds Walmart Inc. equity securities. That is Walmart stock itself valued at over $6.3 billion. This is a deliberate strategy, offering employees a chance to invest directly in the company they work for. But it is not just Walmart stock. Look at this list of other common stocks. Abercrombie 40, AMP Fitch Company common stock is listed with a current value of over $3.4 million. Academy Sports Sign, ARB Outdoors Inc. Common stock is valued at over $1.6 million. This extensive list of common stocks held by the plan shows that participant 400 once are heavily invested in the stock market, a common strategy for long-term retirement savings. The plan also holds a variety of government securities. For instance, there is a Freddie Mac security valued at over $73,000 with a 6.17% interest rate and a maturity in 2052. These government-backed securities are generally considered safer investments within a retirement portfolio. There are also international government securities like Abu Dhabi Crude Oil Pipeline LLC bonds, with a par value of over $1.3 million and a 4.6% interest rate, due in 2047. Scroll Corporate Bonds Alphabet Inc. Thefors. Scroll Corporate Bonds are a big part of the portfolio too. Alphabet Inc. has corporate bonds listed with a par value of over $1.8 million and a 5.45% interest rate, maturing in 2055. The sheer volume and variety of these corporate bonds show a diversified strategy aimed at generating income and capital appreciation. Backed securities Affirm Master Trust Scroll the plan also holds asset-backed securities like ones from Affirm Master Trust, totaling over $3.4 million with a 4.37% interest rate maturing in 2034. These are backed by pools of assets, giving investors a claim on the cash flows from those assets. Scroll mortgage-backed securities AdTLX Trust Subtrol. And then there are mortgage-backed securities such as AdTLX Trust, with a par value of over $1.1 million and a 3.85% interest rate due in 2064. Scroll Collective Investment Trust Society Collective Trust Funds BlackRock Institutional Trust Company NA Russell 1000 Index Non-Lendable Fund. Scroll finally, a massive portion of the plan's assets, over $46 billion, are held in collective investment trusts managed by firms like BlackRock. This includes funds tracking major indexes like the Russell 1000, along with other specialized funds. These are essentially very large mutual funds tailored for institutional investors like retirement plans. Now, it is important to remember that all these investments come with risks. The plan acknowledges that investments are exposed to various risks, such as interest rate, market volatility, and credit risks, while they aim to limit these risks through diversification and offering high-quality options. They explicitly state that it is at least reasonably possible that changes in the values of investment securities could occur and materially affect participants' account balances. This is a standard disclosure, but it underscores that even with professional management, market fluctuations are a reality for retirement savers. A key point here is that some of these investments involve related parties. Bank of America, Merrill Lynch, and Northern Trust Company are all involved in managing or providing services to the plan. The plan also holds notes receivable from participants, which are considered party-in-interest transactions. While these are permitted and exempt under ERISA rules, it is good to be aware of the interconnectedness. The significant holding of Walmart Inc. equity securities is also noted as a permitted exception under ERISA, allowing employees to invest in their employer's stock. Looking at the big picture, this filing shows a retirement plan that is massive, growing, and actively invested across a very wide range of assets. The strong performance of investments and the high participation and contribution rates from employees are positive signs. The company's matching contributions are generous, reinforcing their commitment to their workforce's financial future. However, the substantial participant loan balances and the inherent market risks are areas to keep an eye on. What I am really seeing here is a testament to Walmart's scale and its dedication to employee retirement savings. They are not just a retail giant, but a significant financial player when it comes to supporting their employees' long-term financial well-being through this massive 400-wonk plan. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like, comment, and subscribe for more insights, and join the Discord linked below.